The planning conversation starts here on the Income Protection Podcast. Here's your host, Mike Cogdall and Grayson Owen.
All right, Mike, we're back. We got a special guest today. But before we introduce our guest, I wanted to check in with you. How's life, man?
Spring break, my friend, spring break. You know, Northwest Florida has a huge spring break. Unfortunately, the water's not warm enough to go into, but for some reason, everybody from the major cities in the Southeast like to come here for a week. So it's been a little crazy around here. We got one more week. I guess we go till Easter. But other than that, you know, weather's good. Everything else is good. Excited to have Alex here today. And what's going on in your world, Grayson? Real quick.
Not too much, just doing the usual stuff, man. You know, helping brokers sell more DI, and looking forward to heading down to the Panhandle next week, because we're going to put together some new videos for helping brokers educate consumers on these DI sales concepts. So I'm looking forward to that. But without further ado, I'd like to introduce our guest today, Alex Wesdorf, who is a colleague and a friend of ours. And Alex is a disability insurance expert. And he has a very unique vantage point in this industry, because not only was he on the carrier side, but is now in the independent BGA wholesaler side at DIBroker East. Alex, welcome to the Income Protection Podcast.
Yeah, thanks for having me, man.
So, Alex, just to start off here, because you have this unique vantage point in our industry, I'd love to hear your take on the disability insurance industry today and maybe where you think things are going.
Alex, one question.
Yeah.
You're not that unique. You're just copying me. I came from the home office, went to the field, and we're both from Iowa. So we have an awful lot in common, except for age, my friend. Now you can run.
Yeah.
Go ahead. I'm sorry.
No, I think it's really interesting. The disability market, it's an unknown market. It's always been an unknown market. It's a niche inside, but, I think, Mike can touch on this, but, over the last 20 years, it's changed rapidly. You see a lot more carriers who have exited the business. You see a lot less wholesalers for the companies that are remaining. And, we just had a carrier that jumped out earlier this year with Mutual of Omaha. And, sometimes when I was on the carrier side, it's good to hear that carriers are jumping out, but as an industry as a whole, it provides less solutions, less voices. And so I was at a conference last week for one of the carriers, and they said over the last 20 years, they're down, the producing agent marketplace is down 40%. So there's 40% less people talking about income protection that used to write it over the last 15, 20 years. And so it's really alarming, because, the income protection conversation shouldn't stop, right? There's still people that need to protect their income. There's just less carriers, less wholesalers, less conversations just being had in today's marketplace, which sucks.
So do you think it's brand awareness? Because with one carrier, Alex, it doesn't matter what carrier you went to last week, with just a handful of carriers left, and we all would agree there's like 6 of us, right? 6 carriers, basically 5, 6, whatever. Would you agree that then it's 40% across the board? I mean, so it's industry wide, because everybody goes to the same carriers, right? I mean, they shop the business, and it's the same group of people, or the same carrier group every single time. So if it's the same for one carrier, I in your opinion, I'd have to believe that it's the same across the board.
Yeah,
40%.
it is. It's not even the career shops, right? It's not that the career shops are down 40%. They're probably way more, unless you're Northwestern Mutual, probably. But it's 40% across the board of just independent advisors that are just not having this conversation. They're not running the business.
Well, I know of a relatively large carrier that only wrote $3 million proprietary. And what I mean by proprietary is career last year. And $1 million of that came from a father and son combo. You probably know who it is. We don't need to say. So of the over 1,000 producers divided up, 1,000 producers left with $2 million. What is that? Not even a policy per?
Yeah. I mean, if you look at I have some of the data from some of the carriers, a carrier rep told me that in 2010, this carrier had written, between life and DI, $75 million of premium in 2010. 2024, they wrote 13. So again, this isn't just a DI conversation. This is a risk protection just overall. It's just not happening. And the underwhelming ability to have this conversation is scary, because again, people are getting sick more It seems like everybody's getting cancer these days. And so not having this conversation is detrimental to the planning for these people. So if you're down 40% across the board, we're in trouble.
And I go back a lot farther than both of you. So take it all the way back to when I started in fall of 1987. So use 1988. There were probably as many carrier reps when I started in the city of Seattle from various companies as all companies combined today, to include us, the wholesale people, because there weren't a lot of DI wholesalers that were independent. There was only a couple of what you and I, and we refer to as general agents, that did disability specifically. There were more in a single city. And it was so much easier to do because I would go to a place called Plaza 600 and I'd run into at least 4 of my competitors on the same floor at any given day, 3 days a week. Actually, we'd have coffee together. And so you fast forward now all of those years, and there has to be a way to get the message out, for lack of a better term. Just get the message out. And I think you and Grayson both, and you specifically right now, I want to ask you the question, using social media and what you do, just go ahead and touch, for me, the guy that's a little bit more advanced in age, for lack of a better term, on what you're doing today and how you're trying to get the message out, because I know it's still difficult. And I'll, harken back to as Grayson always laughs at me, to make a short story long, when I was young, I'd stay after work and I would print quotes on a machine, like almost like a little fax machine, like ditto print or something weird, put it together with a binder, put it in an envelope, put the guy's name on it, lick the envelope, mail it, take the whole box, put it in my car, drive around the next day in the city of Seattle in 1988, deliver the quote, get the time to see the person and have a great conversation, and then follow up 5 days later, whether or not they sold it, we're going to sell it, got it sold, and everybody that was in our industry was aware of disability insurance. Fast forward all these years later to 2025, and you and I both know that's not the way you do business anymore. So I want you to elaborate on how you do business now, and maybe we can help others out there get to the same point.
Yeah, I think the hard thing with insurance is that everybody sees you as a salesperson or a sleazeball. So for me, my biggest thing once I joined the independent side was I made a conscious effort to create a brand for myself, a personal branding of, okay, this is who I am, this is the type of person I am, and this is what I do. And that's worked out really well. So I post on LinkedIn every day for the last 8 months since I've joined on here. And, it takes a lot of time. A lot of people kind of peace out after, a few days or a few weeks or a few months of posting and just not getting a lot of feedback or success in the DMs or anything like that. And I know that if I can't rely on the carriers to market this thing, because again, the carriers themselves don't spend the money on marketing for DI. They spend it on everything else, right? So I know that this industry is aging and getting out of the business. And so I need to go talk to younger advisors. And the best way to do that is on social media. Every single young advisor is on social media of some platform, whether it's YouTube, Instagram, LinkedIn. LinkedIn is where I do most of my content right now, just because, again, most financial advisors are on LinkedIn. And that's been very successful for me right away. I was just in Denver earlier this week, and 4 of the 8 meetings I had were LinkedIn connections or referrals from LinkedIn connections that has now led into more LinkedIn connections. And I think that, again, what I have found is that a lot of people don't want to do this business. They don't want to deal with the cumbersome, what you just brought up, where you're printing and doing all that stuff. Well, post-COVID, everything has become so much easier in so many areas. But when it comes to DI, it's not always the easiest thing. We have DocuSign and stuff like that. But the application process and then the underwriting to go through, these guys just don't really care about it. So I'm really marketing myself as a specialist when it comes to disability. And I think LinkedIn is the key to success.
So are you personally then, when you connect, like I used to just, use a landline and dial for dollars. And I don't think anybody that's in education and coaching, it's called sales, but I know what you guys do, and just about everybody I know, they used to make funny, what are you, a used car salesman? There's nothing wrong with being a car salesman, because you still have to educate somebody. So we put that stigma out there, and we know that's really not the case, because at the end of the day, your goal is to help somebody. But my question to you is this: when you connect with somebody, and we'll use LinkedIn as the example, when you connect, how do you start communicating? And then obviously at some point you go physically go eye to eye, or as I always say, between four eyes, eyeball to eyeball, and talk and meet with these people. And tell me that process. And then when you do meet, because you are meeting with people physically, right?
Yep.
And does that pretty much, and I'll use a simple term, does that seal the deal then? That like they actually like now they go, okay, I know this guy. I've got total faith and confidence that this can happen. The guy's with a really reputable organization and he knows what the heck he's doing. So just go through that process. How long, how many back and forth on LinkedIn, or if you start Instagramming or text messaging, or make a couple of phone calls, or it's like at some point you have to go, you know what, I'm coming to see you. Or tell me how that process works.
Yeah. So when I connect with someone on LinkedIn, like I'm looking at, who they're with, let's see what their broker dealer is today, because some of these broker dealers are captive to different agencies that can't work with me. They have special agreements. And so I'm looking for younger producers, in their late 20s to late 40s. That's really what I'm producing or looking for, because I'm 34 years old. A guy that's, 55, he's probably somewhere, he's been there for 30 years.
Careful.
He's not going to come work with me probably, unless I had prior relationships with him when I was at the carrier side. And so I don't DM people right away. I give it like a week, and then I'll follow up with them, because I want them to see, I'm going to be in their thread every single day, because I'm posting every single day. So I want them to see who I am, what I'm about. And again, brand recognition is really big for me. So then I start DMing them. We go back and forth. I always book a Zoom call for a following week to grab a 20-minute, 30-minute Zoom call. And then we kind of talk through life. We just talk about life before we get into income protection. And I would say that 20 of the 30 minutes is just getting to know them and knowing what their book of business looks like, and see if there's even an opportunity to have this conversation. And then I talk about like, what do I do? And I offer two platforms, wholesaling and broker, because again, some people will want to be educated so that they can go educate their clients. Some people want to be educated so that they're dangerous, but they don't want to deal with it. They just don't want to deal with it. Like they're like, hey, I can make $1,000 on this policy. Or I could just not worry about it and let you do it. And so I really focus on, once I built a relationship and you start writing business with me, then I'm going to like, hey, I'm going to come see you. Like these meetings that I had, or if I'm going to if I'm going to travel to Denver, I want 8 meetings, in 2 days, at least 8 meetings, right? When I'm driving around doing all these things, because I'm not going to come see you if you've never written a piece of business, because I'm going to wait. Like I want to see if hey, is this going to be a partnership, or is this just going to be a one-time transactional deal? And that's going to happen, but I'm not going to come see you. I still think that if I can get across the table from you and I can have coffee with you, I think that you'll see who I am as a person, and not from an arrogance perspective, but I think that the business is closed then, because you're going to trust me. You're going to understand this is who I am. This is what I want to do. Sales has a bad connotation to it, because you feel like a sleazeball, but I posted this on LinkedIn. There's a difference between a sale and a solution. And with a solution comes a sale, always, right? Whether you're a financial advisor looking to roll over money, that's a sale. Like that's going to happen. You're going to make money on that transaction as a financial advisor. It's the same with disability insurance. But the salespeople are the ones that are on TikTok trying to sell you an IUL or a whole life. And, and it makes no sense for the client. It's not in the best interest. That's why the industry is where it's at today.
So let's just do, out of 10, how many people do you actually start? Because I know this is not an easy business. As I've always told Grayson, if this was professional baseball, I sure as heck don't bat 400. I think I'm batting 1 after my whole career. 1, if I'm lucky, because it takes a lot of people. So out of 10, how many people do you ultimately end up calling clients or partners?
I would say my hit rate on people that are willing to take a phone call, that are willing to have the conversation, it's probably 4 out of 10 right now.
And then ultimately meet.
Yeah, I would say ultimately meet, it's going to be way lower, just because I don't have a region anymore. Like when you're at a carrier, you have a territory. I'm talking to people on every time zone right now, and I love it. If I'm talking to a dude, I'm not going to, and I actually, that's not true, because I'm not talking to people in Hawaii. I don't know how much business is up from there, but I really don't go to see people unless you're gonna commit to me to write, 1 a month, right? If you're gonna write 2 a year, I'm your guy. I'll be there. I'll answer your phone call. I'll answer your emails. I'm gonna check in with you. quarterly, but I know who you are, right? And I think that's my biggest thing when I do a Zoom call is I want to know who you are. Are you going to have the conversation with every single client that makes sense? That will decide my travel schedule.
Well, and there are people now that, what we're doing right here is good enough. I mean, I understand that. It's just COVID, regardless, and we still going to use that word for the rest of our life, I guess. I mean, I will, because it impacted me greatly and my children. But that being said, you said something interesting, and I want you to elaborate on that just a little bit. See, when you said I talk to producers, I talk about an app or two a month, and Grace and I've already touched on this before, because you don't care if the premium's $600 or $6,000, and that's sometimes where people get lost. It's the only thing I think, and you would probably agree that you can control, is what? App count, right? Yeah. I mean, that's what you get to control, and that's, I think, if you're, let's say, we're going to talk broker here in a second specifically, because you've got the guy that can do it, and he's decided he really likes your organization, and you guys are with DIBroker East, Esquire and Associates down in Miami. They're the biggest in the country, super reputation. So that part is phenomenal for both of you. I'm actually affiliated myself, so shout out to that, because they built a really, really great organization that anything that you say from a work perspective, you can pretty much back up.
Yep.
That being said, how many people now are saying, Alex, I'm your guy, or you're my guy, Alex, excuse me. And I really just don't do this. And then you have to have the conversation. Well, but you would agree everybody needs it, and go down that path. You already know how to do that well. What point do you get to where you say, listen, there is a solution here that I can do it for you? And then what is the pushback, and what do you get from there?
Yeah, I ask, I would say that more frequently I'm asking when I'm talking about income protection, the agreement is their client needs it. The conversation is how do you solve for it? And so what I say is, you have two options with me. I can be your wholesaler. I can help you. We have a team that's going to run your quotes, going to do your case management. We're going to look through underwriting, send you the reminders, but you're going to take the app. You're going to talk to your client. You're going to sell it, all that stuff. And if you don't want to do that and you want to hand it off to me, then we can talk about splits. Nobody works for free. I'm not going to do an app for you for 10%. That's not worth my time. Because at the end of the day, I'm going to go talk to more brokers who want to have this conversation. And so a lot more conversation recently have been with younger advisors, I would say under 40, 30 to 40. If you're in the business at 30 years old, you've made it, right? You've been in the business.
It's a 5 year. It's usually a 60-month or a 5-year spread.
Exactly.
You're either in or out after 5.
Yeah. And so, if you're a younger individual and you haven't made it, you'll probably write the business yourself because you need it, right? You need the income from the sales of the insurance piece. And then, but if you've made it, if you're 5 years plus, you might start saying, man, this just isn't worth my time. Alex, you know what you're doing. This is what it is. I trust you. You're going to go shop it. You go present to my client. Here's a warm intro. And I've had 8 of those meetings this week, right? Where I've had to do that because they don't want to do it. They know it's necessary, but they're going to keep doing what they're doing. And I think the hard thing is that you don't just see a lot of money managers anymore. You do, but you don't. Like the amount of advisors that I talk to are looking at estate planning and tax strategies and backdoor Roth conversions, all this crazy stuff, right? That's necessary for their clients. It's super helpful. That's why they're in the business. They're not in the business to do risk management. They're in the business for planning. They don't want to deal with it. They don't want to do it. But they know that it's needed, so they're gonna give it to me.
Well, without the group of and there's not a lot out there, the family office beyond, crazy rich, because everybody seems to think that everybody, and part of this is social media, and it was even before social media, thinks everybody in America is wealthy. Right. And you start looking at the top 5% of wagers in America, top 10% of families, I think, households. I think you're in the top 10% if you're at $250,000.
Yeah, it's not a lot.
I mean, and that's combined incomes with, both mom and pop working, or just mom or pop or both, whatever, but it's family. So there's this huge band out there that nobody ever touches. And my question to you is, what do you say when this is what you'll get from a producer? I would guess oftentimes, or more often than not. And I want your answer, because it always makes me laugh. It's because, well, Alex, when I run into somebody I think that needs it, I'll let you know.
Yeah. All the time. Yeah.
And what's your response?
Well, I would say this is the most proactive, necessary conversation in the marketplace. If you're only reactive, you will never get a client coming to you unless two reasons. They're sick already. They just went to the doctor. They're jacked up. Or maybe they just started their business and they know they don't have any benefits. Those are your only two options, honestly. And so I educate them and I said, if you're not proactive, this conversation is not happening. You know, I get the guys all the time like, I've been in the business 15 years. I've never had anybody come to me. I was like, you are the financial advisor. You need to go to them. Like, you are the planner. Like, you need to bring it up to them because, again, just like the advisory world is not educated on disability insurance, can you imagine the average person being educated on disability insurance? The answer is no way. Like, if you get married, you know you need life insurance as the average consumer, right? You have no idea what disability insurance is unless you're like your only exposure to disability insurance is probably Aflac because they're the only company that actually advertises the product, you know, like seriously.
And you've heard me say if it's good enough for Nick Saban and Deion Sanders, it's good enough for me if you're a football fan. So that's the end of that story right there, right?
Yeah.
That's how it works.
The duck, man. Everyone's like the duck. And I'm like, I'm not the duck.
So let me ask you a question, and we're all different people, and I'm going to throw something your way just because I've been around for a really long time. Sometimes you can use this or not, but this is for our listening audience. It's almost as easy to say, you know what, when you run into a client, you tell me, and, you know, if they need it, like, you know, I'll let you know if someone needs disability insurance. The easiest question to ask in the world is it's probably easier for me right now for you to tell me how many of your clients don't need it. They probably have two.
Yeah.
That way you've got the producer all of a sudden thinking in another way, right? A little bit. It's like, you know, let's make this easy. Tell me how many of your clients don't need it.
Yeah.
Because now we have, if you got 500 clients, you got 476 that need it and some that are too old or extremely wealthy or retired.
That's why I asked him. I said, when I'm starting to get to know him, I'm like, hey, what does your book of business look like? What are we talking? Are we talking pre-retirees? Are we talking young families? You know, the Henry is an acronym that's used that a lot of advisors are going after. And so if they're talking to me, hey, I deal with a lot of young families. I'm like, okay, so how many of them can go without their income for 6 months? Oh, none of them. I'm like, well, that's your client. That's what this conversation is about. I'm not talking to people who are 60 years old. Right? You should have had a long-term care conversation with them by then, right? And they're probably self-insured if they're working with you, right? Because you have the financial plan that should have them retiring pretty soon. So I'm not worried about the old people. Sorry, but
it's okay. It's okay. I can take that.
I'm worried about wealth accumulation stage of life for people. I'm not worried about people that are 59, right? Doesn't mean that they don't need the plan. It's going to look way different. I educate the advisor. I'm like, you wrote term life insurance on that 29-year-old couple. Why? Well, if one of them dies, they got to replace income. I was like, yeah. What if they become sick and they don't die? They're just laid up in a bed. And so I think it's just, again, it's a lack of education when it comes to it. Again, I got into business 7 years ago. I knew nothing. I was at a principal for 4 years prior to on the group side, and I knew nothing about this conversation. So imagine the average advisor, even if you have your CFP today, when I talk to people that have their CFP, the only thing that they learn from the CFP exam, no disrespect to the CFP, is true ONOC. And then I say, what is true ONOC and who needs it? And they're like, I don't know. I was like, okay. I was like, all you need to know, all I try to educate advisors on is how to have the conversation. Because if you can educate the advisor, then they can go educate their client. Either they have group insurance or they don't. What's the downfall of only having group and blah, 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 blah. I don't need them to be an expert because that's my job. I just need them to ask the question.
So are you finding your practice gravitating more towards, we use the term broker an awful lot, and broker is actually, you know, for anybody that doesn't totally get what we're talking about, it's you doing, as you've alluded to twice now, you doing all the work for the producer to get it done. Because at the end of the day, if somebody doesn't do it, the client's problem is still the same tomorrow. Correct? We both know that.
Yeah.
So how is your practice gravitating more towards that? Because it's just, the word's not easier, but it's, you know, if somebody gets comfortable with you and knows you're going to do the right thing, which you absolutely are, you know, people used to ask me, they say, you know what, I am an orthopedic surgeon, you know, I don't really know what to do. And it's like, you don't have to worry about it. I now know what the person does. It's an orthopedic surgeon. I will get you the best policy on the planet for an orthopedic surgeon available. Actually, I'll get you two to look at and you can decide. But that's no problem. So I already know everything I need to know to do this for you and your client. Is that kind of the path you're going down more and more?
I am. I didn't think I would.
Nobody does.
You know, I just think that I know disability insurance. I know nothing else, right? Like, I'm not a 401k specialist. I'm not a AUM guy. And so I think that the route that I'm going is I want the business placed. I know that the clients are in need. And so the advisor, again, is coming to me and saying, hey, will you do this? I said, I will do it, but we're going to do broker if I'm going to do it. Again, they don't work for free. I don't work for free. Like, this is, we're not going to do that. And so we're going to come up with something reasonable. But I would say in the last couple of weeks, I've had so many more guys just say simply, I don't care about the commission. Just do it. It's $1,000. Who cares? I want my clients protected. And then I have guys that are like,
that's absolutely key. And it's a really good point on your part too, because you know what, there is enough revenue there that's not even material to the overall conversation, and it shouldn't be, because there's more than enough there. You're correct. There's an awful lot of people that are now pure AUM that don't, or they don't even take any commissions, right? They're fee based only, so they can't.
Yeah.
And at the end of the day, that's a huge group of people out there that those people never see income protection. I think you would agree, the clients, because that is not what this particular person's doing. One heck of a great job, but that's not what they're doing for a living.
Yeah. Just to kind of echo all these comments on this, I see this too, obviously, since I'm in the same role as Alex, and we talk about this all the time, Alex, on the phone every week. And it all comes back to all of these advisors, whether they're doing assets under management, focusing on life insurance, focusing on 401k, whatever it is, they have so much on their plate that they don't have the bandwidth for this. And so what you're laying out here, Alex, is which path do you want to take? I have a path here where I can do this with you as your wholesaler. I can do this for you as the co-broker to help your client, usher your client through the entire process. So what are other things though that might cause a mental hurdle for an advisor to say, hey, I'm not doing this? What else are you hearing out there that you have to overcome?
Yeah, I think the conversation for us, for all millennia is, Alex, my client doesn't need this because they aren't a doctor, or my client doesn't need this because they're white collar. And, if you talk to the carriers, they all want the white collar business. Everyone does, because the doctor, I always explain to the client, the advisor, the reason your doctor buys this and you don't is because they get it to a different degree. They're treating the reason why you and I will go out on claim, right? They understand the body. They understand the sickness. And so you as a white collar advisor, or me as a wholesaler, we are invincible. We cannot stop doing our job. And that is an ignorance when it comes to what disability insurance is. And really, 90% of claims are sickness related. And so that's the hurdle that I see the most part is they just don't take the conversation seriously because they don't see a scenario where it happens. And I just remind them, like, sickness doesn't play favorites. It does not care what type of job you have. And I said, I'm not worried about you breaking your hand. I'm not worried about breaking my own hand. I can type with one hand. It's not very efficient, but I'm coming back to work the next day. But if I get diagnosed with cancer at 42 and I got to go fight it for the next year, believe me, I'm not going to be able to work, right? I think the ramifications of not being able to work, the stress that it puts on you and your body and your family, people don't take that in consideration when they're trying to fight a deadly disease, that if they don't fight, they're gone.
And Alex, you're extremely transparent, and I think I am too. And the thing that we talk about docs, and I think the doc take rate in disability insurance is around 93%. I know it's in the line 90s somewhere. And all three of us would agree that the reason that happens is because they're aware of it the day they start medical school.
100%.
And it's never goes away from all kinds of producers. And thank God for those producers, right, that make them aware that this exists. The point is, you don't learn that, you don't even learn the rule of 72 as an MBA, right? For how money doubles, the magic compound interest. So how the heck are you ever going to learn about disability insurance? You can go to the Wharton School of Business and they're not going to say, when you get out and you start your company, one of the things you're going to want to do is get this. You're going to want to get some life insurance. You're going to want to do this. You're going to want, call it income protection, call it disability insurance, call it paycheck insurance. I really don't care. And neither do you what people call it, but they have zero awareness. And your point is really well taken. And you just alluded to something that I'm an open book, and this is a podcast. Today at 2:30, gentlemen, I'm going to a funeral of a 47-year-old man that fought esophageal cancer for 2 years with 17, 15, and 9-year-old children. That's the real world. And he fought for 2 years. And he was a mechanical engineer that had a phenomenal organization, was part owner of a company out of California, lived here in Santa Rosa Beach, did tons of government contracting, one heck of a good guy. I'm friends with the family, but they didn't think this was ever going to happen, especially mom. I'm, again, today, you know what? I'm putting on a suit and going to a celebration of life at 2:30 today on a 47-year-old man that was not a physician, had disability insurance, and you hit the nail right on the head. Did not think about work since I've known him. For the last 24 months. And I told you guys, I listened to some guy yesterday because of you guys, I do Instagram and LinkedIn and stuff, at least look at it. And the guy said, we worry about 1,000 things a day. Every day we wake up, we worry about things, our family, our life, our livelihood, even, you know, how are we going to pay our bills? We all laughed about it before the podcast. Point is, once somebody diagnoses you with anything, the only thing you think about is that pain or that sickness. It's the only thing that completely consumes your mind. So your point is well taken. Question for you is, how better do we communicate to everybody? I've been working on it, like I said, for 30 some years now. And when I first started it was actually easy. And with technology and with everything we have today in social media, I actually think it's harder. So what are your ideas? Both you and Grayson. I have a question for both of you. What do you think we can do?
I'll give you an interesting quick stat going back to the white collar versus stock. The conference I was at last week, they said they had, I think, medical residents that graduated last year were like 28,000 and change across the country, right? 28,000 people went into attending physicians, practicing docs. There were over 200,000 people that graduated from MBA programs.
Just MBA.
Just MBA. So
not undergrad. So see, just MBA.
Just MBA. So you have 200,000 people that are graduating MBA programs. They're going to go into successful jobs, engineering, STEM program stuff. And they have no idea this exists. They have no idea that they need to have it. You have so 28,000 people in 2024 know that they should have disability insurance. That's the way I look at it, right? 28,000 working individuals.
With
I don't know how many people work.
Just MBAs.
Yeah, so I think that it's crazy. That's alarming, right? Because we know that the docs will buy it. The 93% is probably accurate. It might be higher, for gosh sakes.
It could be.
Right? I mean, but when it comes to an MBA guy or an individual, just in general, that even knows this exists, man, are we talking less than 10% probably? Yep. Right? Unless they're an attorney, maybe, and they get into the firm and then they get pitched. I mean, again, I came from the insurance. I was on the group benefit side at Principal before I joined the individual side. I didn't know this existed then. And no fault of my own, but like my advisor is a principal advisor. My advisor is a principal advisor. And he's a great dude. He helps me with my money. But these guys got a lot of things going on. So I think the carriers are not going to spend a ton of money because I don't think the DI departments at these companies they don't have the money that life insurance or annuities or all this stuff has. They're not going to. When you see the March Madness for Principal this year, you're going to see the small business owner marketing. It's not going to talk DI, right? That's not their focus. Unfortunately, that's none of the carriers. But so I think it has to come down to the DI community that is shrinking, unfortunately, as well. And so that's why social media is so powerful, because I can get so many more eyeballs in the community that's going to spread, and the referrals that I get are endless now. And I think that's the strategy is every single DI shop, every single DI wholesaler, if you actually care about this product, you need to get on social media, because without it, the industry is going to keep shrinking.
I'll take it a step further here. And anybody listening who's a producer, advisor, insurance broker, employee benefits consultant, Alex already shared the bulk of the marketing, social media marketing playbook in the first 5 to 10 minutes of this episode. You just got to go listen to it. And what he's doing to meet advisors and brokers, you can simply do the same thing to go meet consumers who need help with this product. It's the exact same playbook. And you literally have a nearly limitless opportunity because of what Alex just highlighted, which is you have markets like these MBA students, and their awareness level is probably less than 10%, as you just alluded to. So there is a lot of work to be done. And Alex and I talk every week about social media marketing. He shows up consistently. There's not that many of us in the wholesale space that are showing up consistently online that I see. And I think more of us need to be doing that. But the better message that I need to put out there right now is that if you're a producer helping consumers, not just the wholesale community or the carrier community, you have a unique opportunity to go create this content and put it out there consistently, whether it's Facebook, LinkedIn, YouTube. Do something on a consistent basis, because there is not much competition out there. And Alex and I talk about this. It's kind of scary. There's not much competition out there, and we can share this strategy with you today. And 6 months from now, not many people will take action on this. That's the sad truth. Not many people are going to take action. But if you're listening to this and you decide, enough's enough, I'm going to go create this lane and grow this practice and go help people protect their income, you can go do that. If you start today, you'll look back 2 years from now after doing that consistently, and you will be amazed. Alex, what are your thoughts there, especially on being consistent online, because you've been relentless and consistent and posting every day since you've joined DIBroker East?
Well, I'll say a couple things. One, I was talking with a broker last year who came over with me when I made the switch, and he went from financial advising to straight insurance, and he's in a segment that writes a lot of he writes a lot of DI, and he said to me, "Alex, money has no home. They can't take the insurance away from me." And I use that with all the advisors. I said, "What makes you different?" I said, "If I have a million things coming out of my bank account, I don't switch banks, right? It's annoying. I had a problem with a bank this morning. It sucked. I hated it because I switched banks for business purposes. Like, the more things you can do for a client, you don't have to be the expert in all those things, the less likely that client's going to leave for Joe Schmo down the road. And so I see all these advisors who are really good on LinkedIn. And so that's where I was like, okay, I see you on LinkedIn. You're showing up, you're creating the videos, you're writing content, and it seems like you're growing. And when I would talk to you, you're adding households from it. And so that's why I jumped on the LinkedIn thing, because I think that it's very powerful to do a case study and show, hey, this is what you need to think of from a tax strategy if you're funding all these retirement accounts, and they break down the numbers. I think that's very influential for myself, just educational. I was like, why don't people do that on the DI side? Like, hey, I got a client, they're making $150, they have group LTD, it's 60%, it's taxable income, here's the tax consequences. Think about how many clients you could bring in just simply because you're not being the same guy that's down the street where, hey, I'll manage your money for you. Why can't I be I work with a lot of people that are looking at planning. And this is a part of planning. Don't have to be the expert in it. You're probably not an expert in every single plan you have, right? You have the attorneys, you have the CPAs on staff or in your COI networks. So DI is one of those things where if you can show up and talk about income protection and not be annoying, like I'm probably annoying because I post every day and I segue it into disability insurance, but that's who I am. I think that you'll add so much value, and you're just educating the masses that you're going to add more things. I think you think of tech. Like, tech is a big thing right now, where you talk about these MBA programs. These people are making a boatload of money. They're getting all these RSUs. You see advisors that are hopping to those networks, and they're specializing in a niche. All those individuals, they're brainiacs. They write code. They speak a different language. They have no idea that disability insurance is capped on their group LTD because they make a boatload of money. They're going to get 42% of their income replaced. Like, there's absolutely a market for the social media aspect.
So at the end of the day, you guys, I think, would agree that if you're not really sure where you want to go in this industry, that there's more than enough room for, besides just the two of you and 3 or 4 or 5 other people that I know that are doing it, there's more than enough room out there to actually make a career in specializing in disability insurance.
100%. Yeah. 100%. Like there are people that broker today, and they've made a career out of it. They've been doing it for 30 years, right? 25 years, whatever. And so you can absolutely, you can't make your ends meet if you write 12 apps a year. You can't, right? This is a volume game. But again, the life and DI is a combo sale, in my opinion, every single time. And so you can absolutely make a career in this. Like I have guys who have left, again, the planning side because they just don't want to deal with it. And they're writing a ton of insurance because they know what they're good at. And they know that there's a guy named Rick Carrero that we all know and love in the industry. And he gave this example when I first started traveling around with him. And it was like, where do you want to swim? And there's these two screens. There's this pool that's totally flooded with people that are in spring break in Florida. And they're all at the tiki hut drinking their drink. And then there's this other pool that nobody's swimming in. And he's like, when I would present it, I would say, I didn't ask you where you want to go have a drink. I said, where do you want to go swim? If you want to go swim some laps, where do you want to swim? You're not going to swim in the crowded pool. You need to go swim in the pool that has nobody there. And that's where the insurance is. Nobody's there. They're all gone. And so I think it's a good way to retain clients and get new clients if you're willing to entertain the risk management side of the planning.
Well, on a sidebar to that, the handful of clients that I've had for years and years, obviously, and it's not a huge number, not one of them holds an equities license of any kind anymore. They ultimately said markets go up and down, and that's phenomenal. It just does. I'm not going down. It's just phenomenal. That's the way it works. But, I have this recurring income every single month. And I want you guys to elaborate before we shut down this program today. Because if I have so many millions under management, I'm getting so many basis points for it. It all makes sense. And it's just coming in every month. Stock markets go up and down. In 2008 and 9, if you had 2 million in, within months, you had $1 million. That meant that the producer that was taking care of you, the AUM person, was making only money on $1 million versus
right.
2. I
Right.
want you guys to just real quickly, so our audience can understand before we close shop here today, to explain how you can make a career doing this. Because if you go through, one, talk about how sticky this business is, and I'll just use the term and you guys can elaborate. And number 2 is how all carriers over time pay a back-end commission, also known as renewals, and how it just kind of, as my good friend Peter Esker has said, stacks on top of itself over time, on how you can really, really, really have recurring income by building this business that you'll look back and go, wow. It's the best I got is wow.
Yeah, I mean, I'll start. I think, when you write life insurance, it's front-loaded, right? You get
Correct.
You get the commission up front, it's done.
But it's needed, so there's no question here.
Yeah. And I think, the thing with disability insurance that's different than the life insurance is that you get the commission up front. It's not as front loaded, depending on who you are, how much you write. But the renewals of this business, like I'm not talking about if you write one policy, who cares? If you're the guy that's writing the one app a month, you're going to look at the 10% range, probably. Average case size, probably $2,000. You're working 24 to 30 grand a premium. These carriers are going to pay you out anywhere from, 7.5 to 12.5% on just the one app a month guy. So you're talking about for the next 8 years or 9 years, whatever it is, you're going to look at a 7.5% renewal that you don't do anything for moving forward after 2025. And then you keep writing the business because it's necessary. And you're the one app again a month, and you write the 30 grand a year. I mean, that thing stacks up. You get a 7.5% renewal on that 30 grand 1 year, and then you do the same thing and you do it for the next 10 years, and that's what you do. Think about how that money just stacks up. It's insane.
And this business just doesn't fall off the books.
Yeah, the persistency is there, right? I mean, we had COVID, we had the 2009 thing. Once somebody buys this, they understand the need, so they don't cancel it. So it's not like life insurance, and same with life insurance, right? Like people aren't canceling their life insurance if they buy it, unless they're at a point where like they're self-insured. But disability is the same way. Like people aren't canceling these policies until they get in their 60s. So if you're buying it in 25, 30, you're not canceling this policy.
Totally agree. I often say once you understand the need for this product, optimism goes away and pessimism gets kicked in. Because the day that you're thinking about not getting is the day you decide that, I might get hit by a car and not die.
Yep,
So you
100%.
I've decided I can't get rid of it. So I always say the day that you actually understand risk management in general, that optimism goes away and pessimism kicks in, because then you realize that something can happen. As we've always said, the crystal ball, you don't have it. We've already told a couple stories today on how just life changes for people in a nanosecond. You just don't want to get rid of it. Grayson's already heard me say, I'll let my house foreclose on me before my insurance premiums aren't paid.
100%.
Absolutely. Because we all care about somebody, even if it's just ourselves.
Yep, 100%.
That's all well said. And I think we end it here today. And Alex, I'd like to say thank you so much for joining us. We look forward to having you back on future episodes as well. We appreciate you sharing your thoughts and wisdom. And for anybody listening that needs to get in touch with you, what's the best way for them to get a hold of you?
Yeah. My cell phone number is 763-222-4264, and then alex.wesdorf@DIBrokerEast.com.
Phenomenal. Well, I learned a little more about social media today, so you guys are really helping an old man here. Greatly appreciated.
Yeah. Thanks for having me on, guys.
Thank you.
Anytime, Alex. Mike, I'll see you on the next episode.
I got you. Be well. Enjoy the weekend. And remember, financial planning starts with a risk protection package first.
And your clients are counting on you. See you on the show next time.
All right, my friend, be well.